The world of cryptocurrency moves fast. Fortunes are made and lost in seconds. But behind the flashing charts and hype, there's a system, a strategy, that separates the winners from the gamblers. Whether you've ever placed a trade before, or you're just curious how people actually make money from digital coins, this guide will walk you step by step through how to trade cryptocurrency like a pro, even if you're a complete beginner. Trading cryptocurrency isn't about luck. It's about understanding how the market works, how trends form, and how to manage risk. Before diving into charts and exchanges, every new trader needs to understand what cryptocurrency trading truly means. In simple terms, crypto trading is the act of buying and selling digital assets like Bitcoin, Ethereum, or Cardano with the goal of making a profit from price movements. Unlike traditional stock markets that close at the end of the day, the first step in learning how to trade cryptocurrency is choosing the right crypto exchange. Platforms like Binance, Coinbase, Kraken, and Bybit are among the most trusted for beginners. These exchanges allow you to buy, sell, and store your cryptocurrencies securely while giving you access to advanced trading tools. When choosing a platform, look for one that offers strong security, low fees, and good liquidity, meaning it's easy to enter and exit trades without delays. Once you've chosen your exchange, you'll need to fund your account. Most platforms allow you to deposit using fiat currencies like USD, EUR, or NGN, or transfer cryptocurrency directly from another wallet. For beginners, it's smart to start with small amounts, money you can afford to lose, as you learn how the market behaves. After funding your account, the next step is understanding trading pairs. In crypto trading, you don't just buy and sell coins, you trade one asset for another. For example, the BTC-USDT pair shows how much one Bitcoin is worth in Tether, a stablecoin pegged to the US dollar. Understanding trading pairs helps you navigate different market opportunities across various cryptocurrencies. The heart of successful cryptocurrency trading lies in understanding market analysis, specifically technical analysis and fundamental analysis. Technical analysis is about studying charts, price movements, and patterns. Traders use indicators like the Moving Average MA, Relative Strength Index RSI, and MACD Moving Average Convergence Divergence to predict future price behavior. Learning how to read candlestick charts, with green candles representing upward movement and red ones showing declines, is an essential skill for spotting entry and exit points. On the other hand, fundamental analysis focuses on the underlying value of a cryptocurrency. This involves studying its technology, use case, community strength, partnerships, and tokenomics. For instance, a coin with strong developer support and real-world adoption like Ethereum may have stronger long-term potential than one built on hype alone. Beginners often start with spot trading, which involves buying a cryptocurrency at one price and selling it later at a higher one. This is the simplest form of crypto trading and a great way to get familiar with market behavior. Over time, some traders move to margin trading or futures trading, where they can borrow funds or speculate on price direction, but these methods also carry higher risks. Risk management is the most important part of trading. No matter how skilled you are, losses are inevitable. The key is to protect your capital. Setting a stop loss ensures that if a trade moves against you, your losses are automatically limited. A take-profit order, on the other hand, locks in your gains once your target price is reached. Successful traders don't aim to win every trade, they aim to win consistently and minimize losses. Another key strategy is portfolio diversification. Instead of putting all your money into one coin, spread your investments across multiple cryptocurrencies. This reduces your exposure to sudden price crashes in a single asset. For example, you might hold Bitcoin, Ethereum, Solana, and a few promising altcoins to balance your portfolio. Timing the market can be tricky, but understanding market cycles helps. Crypto often moves in bull markets when prices rise rapidly, and bear markets when prices fall for extended periods. Recognizing where the market stands in its cycle helps you make better trading decisions. To stay informed, follow crypto news platforms and on-chain data tools like CoinMarketCap, CryptoPanic, and Glassnode. These provide valuable insights into trading volume, liquidity, and market sentiment. Since the crypto market reacts quickly to global news, staying updated gives you a competitive edge. Day trading and swing trading are two of the most common strategies for beginners. Day traders buy and sell within the same day to capture short-term price moves. Swing traders, on the other hand, hold positions for days or weeks, aiming to catch medium-term trends. Both strategies require patience, discipline, and a clear plan. Another strategy is scalping, which involves making multiple small trades throughout the day for minor profits. Scalping relies heavily on technical indicators, quick decision-making, and a deep understanding of market liquidity. It's fast-paced, but effective for those who enjoy an active trading style. For those who prefer automation, crypto trading bots can help execute trades based on preset rules. Tools like 3, Pionex, and Bitsgap allow users to automate strategies using algorithms. This helps remove emotional decision-making, one of the biggest challenges for beginners. Emotional control is vital in trading. Fear and greed are two forces that often lead traders to make poor decisions. When prices rise, it's tempting to buy impulsively. When they fall, it's easy to panic sell. Learning to stick to your strategy and trust your analysis is what separates long-term winners from short-term speculators. Learning from mistakes is part of the journey. Every experienced trader has faced losses. What matters is using those moments as lessons. Keep a trading journal to record every trade you make, including your reasoning, entry, and exit points, and results. Reviewing your trades helps you identify what works and what doesn't. Security should never be overlooked. Always store your assets in secure wallets, preferably hardware wallets like Ledger or Trezor, rather than leaving large sums on exchanges. Use two-factor authentication and strong passwords to protect your accounts. It's also worth understanding liquidity and slippage, two concepts that affect trade execution. Liquidity refers to how easily you can buy or sell an asset without affecting its price. High liquidity means smooth transactions. Slippage happens when your order executes at a slightly different price than expected due to fast market movements. For beginners, starting with demo trading accounts or paper trading can be invaluable. Many exchanges offer this feature, allowing you to practice strategies without risking real money. It builds confidence and helps you understand how the market moves in real time. Over time, you'll discover which type of trader you are, whether you prefer fast-paced day trading, longer-term swings, or even algorithmic trading. What matters most is consistency, discipline, and patience. The more you study the market, the better your instincts become. As cryptocurrency adoption continues to grow globally, trading will remain one of the most accessible ways for people to participate in this digital revolution. The key to success isn't chasing quick profits, but mastering the fundamentals, controlling emotions, and adapting to the ever-changing market conditions. Trading cryptocurrency isn't about luck, it's about learning, patience, and strategy. With the right mindset and tools, anyone can master the art of crypto trading and build real financial freedom. If you enjoyed this breakdown and want to keep growing your knowledge in the world of blockchain and digital assets, make sure to like this video, subscribe, and turn on notifications so you never miss the next guide that could change how you see money forever.